Every blown account, every painful loss, every sleepless night in front of the charts comes down to one thing: your mindset.
Trading looks simple from the outside. You see a chart, you see price moving up and down, and you think to yourself, buy low, sell high, repeat the process. But once you sit in the chair, once you actually put real money into the market, you realize that trading is not just about the chart. It is about your own mind. The real challenge is not predicting the next candle. It is controlling yourself while those candles move in ways you did not expect. Most traders fail because they underestimate psychology. They spend countless hours searching for the perfect indicator, the perfect strategy, the secret signal that will never lose. But even if they find a system that works, they still end up losing because they cannot follow their own rules. They risk too much, they exit too early, they hold too long, they take trades they know they should not take. This is the true battlefield of trading. Not the chart, not the market, but the trader's own psychology. Fear is the first enemy. Fear makes you doubt every decision. Fear makes you close your trades the moment they go slightly red. Fear whispers in your ear that the market is about to move against you, even when your setup is valid. Fear convinces you to cut winners too early, to take profits before the move is done, just so you can feel safe for a moment. The problem is, safety in trading often means small wins and big losses. Greed is the second enemy, and it is just as dangerous. Greed shows up when you are in profit and you refuse to close because you want more. You tell yourself, just a little higher, just a few more points, and then I will close. But the market does not care about your wishes. The moment you get greedy, the market often turns against you, and what could have been a good win becomes a loss. Greed also appears in risk-taking. After a winning streak, you start believing you cannot lose. You double your lot size, you triple your leverage, you abandon risk management because you think you are untouchable. And then one trade wipes away everything you built. This is the cycle that destroys traders. Fear cuts the wins, greed multiplies the losses. Revenge trading is the third enemy, and it is perhaps the most destructive. Every trader has felt it. You take a loss, and it hurts. Your ego is bruised, your mind is angry, and instead of accepting the loss, you immediately enter another trade, trying to win it back. You are no longer following a plan. You are no longer analyzing the market. You are reacting emotionally, and emotional trades are always dangerous. Revenge trading turns a small, manageable loss into a devastating drawdown. One mistake becomes two, then three, and before you know it, your account is gone. Overtrading is the hidden addiction that many traders ignore. The truth is, trading can feel like gambling. The flashing charts, the red and green candles, the rush of being in a position, all of this triggers dopamine in your brain. You start trading not because you see a valid setup, but because you are bored. You cannot stay away from the market. You feel the need to always be in a trade. But professional traders understand that quality matters more than quantity. It is not about how many trades you take. It is about how well you execute the trades that fit your edge. Overtrading burns energy, drains your focus, and often leads to random results. Discipline is the solution that ties everything together. Without discipline, no strategy will save you. Discipline means following your plan even when it is uncomfortable. Discipline means taking only the trades that meet your criteria, no matter how tempting other opportunities look. Discipline means walking away when your plan says stop, even if you feel the urge to continue. It is easy to be disciplined when things are going well, but true discipline shows up after losses, when your emotions are strongest. That is the moment when you must stick to your rules, because breaking them will only create more damage. Risk management is the foundation of survival. Most traders blow their accounts not because they are wrong about the market, but because they risk too much when they are wrong. A professional trader thinks in probabilities. They know that even with the best edge, there will be losing trades. They prepare for losses in advance by setting stop losses, by controlling position size, and by never risking more than they can afford. Risk management is not optional. It is the insurance policy that allows you to stay in the game long enough to see the benefits of your edge. Without it, even the best strategy will eventually fail. The mindset of a professional trader is built on patience. Patience to wait for the setup. Patience to let winners run. Patience to sit through drawdowns without panicking. Impatience is what destroys beginners. They cannot wait for confirmation. They cannot wait for their edge. They cannot wait for the market to move in their favor. They want results now, immediately. But trading rewards patience. The trader who waits for the right moment, who lets the probabilities play out, who does not rush, is the one who succeeds over time. To build the right psychology, you must also change how you view losses. Most traders see a loss as a failure. They take it personally. They think it means they are bad traders. But losses are part of the game. Even the best traders lose. What separates professionals from amateurs is how they respond. A professional sees a loss as a cost of doing business. They review it, they learn from it, and they move on. They do not let one trade define them. An amateur, on the other hand, spirals emotionally after a loss, and that emotional reaction leads to more mistakes. Consistency comes from habits. Your habits outside of trading influence your habits inside of trading. If you are impulsive in daily life, you will be impulsive on the charts. If you lack discipline in your routine, you will lack discipline in your trades. This is why successful traders often live structured lives. They value sleep, exercise, and routines that keep their mind sharp. They understand that trading is not just something you do, it is something you must become. Your lifestyle reflects in your results. Another important part of psychology is acceptance. You must accept uncertainty. The market is never predictable with 100% accuracy. There will always be surprises, sudden reversals, unexpected news. If you demand certainty, you will always be frustrated. Instead, accept that trading is about probabilities, not guarantees. Your job is not to know the future, but to execute your plan with discipline, regardless of the outcome of any single trade. There is also the identity shift. Many people say, "I want to be a trader," but as long as you say "I want to be," you place trading in the future. Professionals say, "I am a trader." That identity creates responsibility. If you are a trader, you act like one. You respect your plan. You manage your risk. You treat trading like a business, not a lottery ticket. Shifting your identity changes the way you approach the market. When you put all of this together, you see the full picture. Psychology is not just one thing. It is the combination of fear, greed, discipline, risk, patience, and mindset. Mastering psychology does not happen overnight. It comes from practice, from journaling your trades, from reviewing your mistakes, and from slowly training your mind to act with discipline instead of emotion. The road is not easy. There will be times when you feel hopeless, when you question if you are cut out for trading, when you wonder why you keep repeating the same mistakes. But every professional trader has walked that path. They became consistent not by avoiding mistakes, but by learning from them and building discipline over time. In the end, the market is a mirror. It reflects your strengths and your weaknesses back at you. If you are greedy, the market will expose it. If you are fearful, the market will expose it. If you lack discipline, the market will expose it. But if you work on your psychology, if you master your emotions, the market will also reward you. Because trading is not about beating the market. Trading is about beating yourself, your impulses, your fears, and your greed. The sooner you understand this truth, the sooner you can stop losing money unnecessarily. The sooner you stop searching for magic strategies and start working on your own mindset, the sooner you will see progress. And once you commit to mastering psychology, you give yourself the chance to finally trade like a professional.